Hello there, welcome to this video where we're going to be covering what a fair value gap is and how you can use that in your trading plan. This is, in my opinion, one of the best PDRAs or easiest way to spot it on your charts, and is a very effective way to trade. Okay, so let's go ahead and get started. In this case, you can see there's candle 1, 2, and 3, and there's no space in between candle 1 and candle 3. In this example, price is well balanced. So for instance, this candle right here, the highest point, there's a second candle, and then the third one came and touched the highest point of the first candle. There's no there's no gap in between these three candles. Okay, the same way with the bearish 1, 2, 3, there's no space. And now I'm going to show you an example of what the fair value gap is. And basically, when price is delivered with an inefficiency, it forms what we call the fair value gap. This is a very powerful concept that, combined with others, can provide us with an edge in our entries. So the fair value gap here, one side price offering, the first candle closed here, the second shot through, and then the third one didn't come all the way here, leaving this space in between these three candles. Now, the next time the price comes back to this area, and at some point it will, because it needs to be well balanced and offer in a fair way, most likely it can just shoot up. Now, sometimes it inverts, and I'll show you an example in the next slides as well. Okay, the other type of the fair value gap is the volume imbalance. Is the absence of a body volume. In this case, you can see it formed a huge wick, and then the next candle there was so much power that just jumped, and there is no body in between. This also can be a very sensitive area where the price, if it comes back here, it can just basically shoot up, but also can be a point of resistance. In this case, it was supporting the price to continue to go higher. And then now we have the opening gap. It's an unoffered price range. This normally occurs, and I see that a lot at the close and open of the market. For instance, Friday when the market closes, it closes right here. Sunday when it opens, it just shoots higher. This is a gap that later on that day, most times the price, the market can come down here to fill this gap to continue to go higher. Okay. Now, what is a BISI, and also a different aspect of the fair value gap? Okay, so buy side imbalance, so BISI, buy side imbalance, sell side inefficiency. Okay, so there's no efficiency in terms of offering a sell for people to participate in the market. Now, the BISI, or the fair value gap, that's bullish, right? So we're going up, so it's a BISI. It's a buy side imbalance, sell side inefficiency. The midpoint, the very midpoint from here to here, is the fair value, and the midpoint of the fair value, it's called consequent encroachment. And basically it's just the centerpiece. It's one of the ICT's concepts that I like to use, very effective, and just for formality, we give him credit, but it's also called consequent encroachment, or just the 50% of the fair value gap. This is a very sensitive area. So if price, let's say it's going up, formed the bullish fair value gap, now the consequent encroachment, or the 50% of that fair value, gets violated, which means a candle closes with the body below the 50%. That means the price is probably most likely continue to go lower. Now, if it comes here, touches and closes above, touches and closes above, that means it's respecting this, and now we're going to continue to see price going higher. So it forms, or it works as a way to support price. Okay, same example here. In this case is a SIBI, a sell side imbalance, buy side inefficiency, and then with the midpoint called consequent encroachment. Now, I wanted to give you an example, and then we're going to jump onto the charts, so I can show you a little bit easier on a more practical way. But it's an inverted fair value gap, which is extremely powerful too. As you can see here, going down, we have candle 1, 2, 3. In between, there is no there's a gap. So this is a fair value gap, a bearish fair value gap. So we mark that, and then price continues to go lower. Now, as we move from sell side to buy side, going up, as an example that I mentioned in earlier, the candle closed the fair value with the body. Okay, it closes the fair value with the body. That means it's not respecting, it's not most likely to go lower. It's now basically inverting. We're going to most likely go higher. So now we close with the body, and as we close with the body, notice this here, from this candle to this candle, there's a gap. This is another fair value gap that it formed going higher. So now it's an inverted because it closed and it left a gap here, and then this is now holding the price to continue higher. And what I like to see fair value gaps in terms of a bullish or bearish intent. It's basically showing the blueprint of the big institutions and where the algorithm or the price and the market wants to go. Because when you see small candles like this with no volume, you don't know the intent, but right here you have this extremely big candle and it left the gap. That means we have sellers just basically getting rid of positions and selling off. Now when this happens right here, you can see a huge intent of, now it changed. We were selling, you know, the sellers were winning. Now the buyers are winning because now we shot up higher. So this most likely is going to hold. They don't want it to go lower because they're winning and they're supporting the price, and more people are buying and buying and buying. All right, so let's go and jump to the chart, and I'm going to show you real quick. Before you continue watching this video, I want to quickly let you know that now you have the opportunity to join our Discord community, where you can have access to our exclusive content to help you learn how to day trade profitably. Besides that, you will also find other ways to have multiple streams of income and become part of a community of people that, just like you, want to achieve success. Just click the link in the description of this video or visit levelxtrade.com to have instant access. Now back to your video. How to spot the fair value. Okay, so basically, if you have you just go anywhere on the chart, and this is something that I would definitely encourage you to do, is just go somewhere on the chart and just use a tool to mark, you know, the gaps in between. So for instance, this is a bullish candle followed by a bearish candle, so I'm going to mark from here the low, and then I have a bearish fair value gap right there, and right here you can see there's no gap in between, no gap. Here it closed the gap and then it shot lower, and then I have another fair value gap right here. Okay, so there's a fair value gap, and then I have another one right here. So I'm gonna mark it here. And then let's see, we have a tiny bullish fair value gap right there. And let's zoom in real quick. So as you can see, we have a move high, and then the fair value gap, the bullish fair value gap formed, and this candle came, just touched a little bit here and just continued to shot higher. Okay, so I would encourage you to do this. Just go and find 3 candle formation, and see if there is a gap in between, and then how price reacted to that area when it came back in. Did it violate with the body, or did it react and continue to go higher? That's what we are looking for. And then just so you can easily spot it, just mark it on the chart, even if it's just like that. It gets violated. You don't, right now it's just one of the concepts. Again, you cannot just use this by itself, but this is basically showing us the intent of the market and who is in control at what time. Okay, for instance, right here we've got another one, so it's easy to spot. It has to have a 3 candle formation, and it has to have a gap in between. So bearish right there, and right here is pretty balanced. Bearish, another bullish right there, and we can mark it like so. Okay, so I want you to spot it in the on your charts, and let me know if you have any questions. Leave a comment below, and if you have any questions in terms of this bearish bullish fair value gap, consequent encroachment, if you have a question about BISI or CIBI, and or suggestions, okay, because this is one of the concepts, again, that combined with other ones in an overall narrative of the price that's going to set you up for success. All right, so I'll catch you in the next video.